Alright, before we get into the numbers, the discounts, and the fine print, I need to be completely upfront. I am not a licensed insurance agent or a financial advisor. This video is for educational and entertainment purposes only, based on extensive research and analysis. Car insurance is a complex financial product, and what works for one person might not work for you. Please treat this as a starting point for your own research, and always consult with a qualified professional to discuss your specific needs. Now, with that out of the way, let's talk about why you're really here. Your car insurance renewal just hit your inbox. You open it and your stomach drops. The price went up. Again, you haven't had an accident, not even a parking ticket. You've been a loyal customer for years, but your loyalty is being rewarded with a 20, maybe even 30% price hike. Feels like a slap in the face. You get angry. You think, that's it, I'm switching. You spend a few hours on the phone, plugging your information into a dozen different websites, getting bombarded with calls and emails. You're comparing deductibles, liability limits, and coverage options with names so confusing they sound like they were invented by lawyers to make your head spin. At the end of it all, you're exhausted, confused, and you end up just sticking with what you have because it's easier. The insurance company wins. Again, this exact cycle plays out for millions of Americans every single year. But what if I told you the solution to breaking this cycle, the key to potentially saving hundreds, maybe even over $1,000 a year, isn't with some slick gecko or a catchy jingle? What if I told you it's been hiding in plain sight this whole time, in the same place you buy your rotisserie chicken, your 48-pack of toilet paper, and that giant, dangerously delicious tub of Kirkland's signature trail mix? Yes, we're talking about Costco. And you might be thinking, Costco? The warehouse store? They sell car insurance. Not only do they sell it, but for a very specific type of person, it might be the single best deal in the entire country. But for others, it could be a trap. And that is the entire point of this video. We are going to do what nobody else has done. We're not just going to scratch the surface. We're going deep. We are going to dissect the Costco Auto Insurance program piece by piece, so that by the end of this, you will know with absolute certainty whether it is the right move for you and your family. We will solve the problem of car insurance confusion once and for all. I know what you're thinking. There has to be a catch. Is it just cheap, bare-bones coverage that will leave you high and dry when you actually need it? Is the customer service a nightmare? Is this just a clever marketing ploy to sell more executive memberships? These are the exact questions I had, and they're the questions we're going to answer. First, let's get the most important thing straight, because this is where most people get confused. Costco itself is not an insurance company. They don't handle your claims. They don't set your rates. They are, essentially, a massive, powerful matchmaker. Costco has used its colossal bargaining power, the power of its over 100 million members, to negotiate an exclusive deal with an actual insurance company. For years, this partner was Ameriprise, but recently they've switched. The program is now run by a company called Connect, which is a part of American Family Insurance. Now, American Family, or AmFam, is a huge player. They're a Fortune 500 company. They've been around since the 1920s, and they have a solid financial strength rating, which is crucial. It means they have the money to pay out claims, which is, the entire point of insurance. So right off the bat, we can put one fear to rest. This isn't some fly-by-night sketchy operation. You're getting insurance from a major, established national carrier. The Costco part is the secret sauce. It's the layer of exclusive discounts and benefits that you can only access by coming through the door with your membership card in hand. So what does that actually mean for your wallet? The headline, the big promise, is the Costco member discount. But that's just the beginning. We're going to break down the real value here. We're going to look at the other perks that most other insurance companies charge you extra for, or don't offer at all. Things like lifetime renewability. Think about that for a second. The ability to not be dropped by your insurance company just because you had a couple of tough breaks. We'll explore their roadside assistance program, which includes things you might not expect, like coverage for your RVs and motorcycles. And we're going to talk about the single biggest benefit that almost everyone overlooks: the executive member benefit. If you have that black card from Costco, the game changes completely, and we will show you exactly how. But this isn't a commercial for Costco. We're also going to pull back the curtain on the downsides. We'll investigate the complaints. We'll dig into the real-world customer service reviews and claim satisfaction ratings from sources like J.D. Power and the National Association of Insurance Commissioners. Because a cheap price means absolutely nothing if they're impossible to deal with when your car is crumpled on the side of the highway. We'll talk about who this insurance is not for. If you have a complex driving history, a DUI, or a collection of speeding tickets, this might not be the promised land for you. And it's critical you know that before you waste your time. We'll also examine their technology. Is their app any good? Is it easy to manage your policy online? Or are you stuck in a phone tree from 1998? Our mission here is simple: to give you a brutally honest, incredibly detailed 360-degree view. We're going to compare their rates against the big guys, Geico, Progressive, State Farm. We'll run multiple quotes for different driver profiles in different states with different cars so you can see how they stack up in the real world. We'll look at a 25-year-old single driver in a Honda Civic. We'll look at a 45-year-old family with 2 cars, a minivan, and a teenage driver. The scenario that strikes fear into the hearts of parents everywhere. By the time we're done, you'll have a complete roadmap. You'll understand the marketing, you'll understand the reality, and you'll have a clear, actionable plan to figure out if you're one of the people who could be saving a fortune. So, is Costco Auto Insurance just another loss leader, a gimmick designed to get you in the door to buy a pallet of protein bars? Or is it genuinely the best-kept secret in personal finance? A true cheat code for saving money? Let's find out. First, let's pull back the curtain on what this program actually is. When you sign up for Costco Auto Insurance, you're not actually being insured by Costco itself. Costco doesn't have a team of underwriters in an office somewhere behind the tire center. They aren't the ones processing your claim if you get into a fender bender in their own parking lot. Instead, Costco has done what they do best. They've used their immense buying power to negotiate a special deal with an established insurance company on behalf of their millions of members. This is a critical distinction. It's a partnership, a co-branded venture. The company you're actually doing business with is called Connect, which is powered by American Family Insurance. Now, if the name Connect doesn't ring a bell, you're not alone. It's not a household name that runs Super Bowl ads. But American Family Insurance? That's a different story. AmFam, as they're often called, is a Fortune 500 company. They've been around since 1927. They're a massive, financially stable insurer with a huge footprint across the United States. This isn't some risky startup. This is a legacy company. So right off the bat, we can put one fear to rest. The company underwriting these policies is legitimate and has the financial muscle to pay out claims. So, the Costco Auto program is essentially American Family Insurance, wearing a Kirkland signature jacket. They've created this brand, Connect, to handle policies for members of large partner groups, like Costco. The idea is that by marketing directly to a massive pre-vetted group of people, Costco members, who are statistically more likely to be stable homeowners with good credit, they can cut down on their marketing costs and pass those savings on to the customer. At least that's the theory. But what does this special deal actually get you? What are the tangible benefits you receive just for flashing your Costco membership card? It's more than just a simple discount off the top. There are several key features baked into the program specifically for Costco members, and this is where we start to see if the value proposition holds up. The most advertised benefit is, of course, the exclusive Costco member discount. This is a percentage taken off your premium simply for being a member. The exact amount varies by state and your individual risk profile, but it's the foundational piece of the savings puzzle. But here's where it gets interesting. The perks go beyond just that initial discount. One of the biggest and most unique promises is something they call lifetime renewability. In the world of auto insurance, this is a very big deal. Normally, an insurance company can choose not to renew your policy for a variety of reasons. Maybe you had a couple of at-fault accidents, a few too many speeding tickets, or they just decided to reevaluate their risk in your area. They can just send you a letter saying, "Thanks, but no thanks," leaving you scrambling to find new coverage, likely at a much higher rate. Connect promises Costco members that, in most states, they will not cancel your policy due to the number of accidents you have. Now, let's be crystal clear about what this means and what it doesn't. This isn't a get-out-of-jail-free card. Your rates will absolutely go up if you cause accidents. You're not immune to the financial consequences of being a risky driver. What lifetime renewability protects you from is being dropped entirely. There are, of course, exceptions to this rule. They can and will drop you for major violations like a DUI, getting your license suspended or revoked, insurance fraud, or obviously if you just stop paying your bill. But for the average person who has a string of bad luck, a couple of fender benders in a short period, this provides a powerful safety net. It's a promise of loyalty from the insurer, which is something you rarely see. The next member-exclusive perk is the glass repair deductible waiver. This one is simple but incredibly practical. If you have comprehensive coverage on your policy and a rock flies up and chips your windshield, You typically have two choices: pay out of pocket to get it fixed, or file a claim and pay your comprehensive deductible, which is often $250, $500, or even $1,000. For a small chip, paying a $500 deductible is insane. With the Costco program, if the chip or crack can be repaired instead of the whole windshield being replaced, they waive the deductible entirely. You pay nothing. It's a small thing, but over the life of a policy, it's a tangible benefit that can easily save you $100 here and there. But the value proposition changes depending on what kind of Costco member you are. This is a detail that gets lost in the marketing. If you are a Costco executive member, the one with the black card that costs twice as much but offers 2% cash back, you get additional exclusive insurance benefits that Gold Star members do not. The biggest one is roadside assistance. For executive members, every vehicle on your policy gets roadside assistance included at no extra charge. This covers you for up to $75 per incident. It includes towing to the nearest qualified repair shop, flat tire changes, lockout assistance, fuel delivery, and battery jump starts. Now, you could get a separate AAA membership for this, which costs anywhere from $60 to over $120 a year. Or you could add it to another insurance policy, where it typically costs a few dollars per month per vehicle. With the Costco Executive Plan, it's just included. If you have multiple cars, this benefit alone could easily offset the extra cost of the executive membership itself. On top of that, executive members also get that lifetime renewability protection we just talked about. For Gold Star members, that benefit is not always a guarantee. It can be an optional add-on depending on your driving record and state. For executive members, it's a built-in feature of the policy. So, when we lay it all out, the package starts to look pretty compelling. You're being insured by a massive, stable company in American Family Insurance. You get a baseline discount just for being a member. You get practical perks like the windshield repair waiver. And if you're an executive member, you get two powerhouse benefits: free roadside assistance and the peace of mind that comes with lifetime renewability. On paper, it's a very strong offering. It seems meticulously designed to appeal to the savvy, value-conscious Costco shopper. It's not just a discount. It's a suite of benefits that address common pain points for drivers. This is the what? This is the product they are selling. It's a carefully crafted package that leverages the trust of the Costco brand and the institutional power of American Family Insurance. They've stacked the deck with features that sound fantastic. But the insurance world is filled with glossy brochures and big promises. The real test, the only thing that truly matters, is what happens when you plug in your own information. What number does the calculator spit out at the end? How does that number, that final premium, actually compare to the quotes you can get from the companies you see advertised every 15 seconds on television? Because all the perks in the world don't matter if the base price is 30% higher than everyone else's. The promise of a discount is meaningless if the starting point is in the stratosphere. So, to find out, we have to put this theory to the test. We have to strip away the marketing, ignore the promise of free roadside assistance for a minute, and just look at the cold, hard numbers. And that's exactly what I did. I spent the better part of a week creating 3 distinct, but very common driver profiles and ran them through the gauntlet. I got quotes from Connect, the Costco provider, and then I pitted them against the biggest names in the business: Progressive, Geico, State Farm, and Allstate. For every single quote, I used the exact same coverage levels, 100/300/100 liability, with matching comprehensive and collision deductibles. This is a true apples-to-apples, no-holds-barred price comparison. Let's meet our first driver. We'll call her Sarah. Sarah is 28 years old, single, and lives in a bustling urban area. Let's say Denver, Colorado. She has a clean driving record, not a single ticket or accident. She drives a 2022 Honda Civic, which she's still making payments on, so she needs full coverage. This profile is a classic test for insurers. She's young, lives in a high-traffic area, and drives a popular, frequently stolen car. Her insurance premiums are going to be on the higher side no matter where she goes. So, how did Costco do for Sarah? I plugged her information into the Connect portal. The initial quote came back at about $1,350 for a 6-month policy. Then, after applying her hypothetical Costco executive member discount, that dropped to $1,280. Not bad. But how does that stack up? Geico came in a little higher, at around $1,420. Allstate was way up in the nosebleeds at nearly $1,600. State Farm was more competitive, quoting her at $1,310. But the winner for Sarah by a hair was Progressive, which came in at just under $1,250. So, for our young urban driver, Costco was very competitive. It beat 3 of the 4 major carriers, but it wasn't the absolute rock bottom cheapest. It was in a statistical dead heat with State Farm and just a few dollars a month more than Progressive. This is a crucial finding. It tells us that even for a profile that isn't Costco's stereotypical suburban family demographic, their pricing is right in the ballpark. It's not an automatic slam dunk, but it absolutely belongs in the conversation. You wouldn't be crazy for choosing them. But let's move on to our second profile because this is where things get really interesting. Meet the Millers. They're a family of 4 in a suburb outside of Dallas, Texas. We have a 45-year-old husband and a 43-year-old wife, both with perfect driving records. They have 2 cars, a 2021 Toyota Highlander and a 2019 Honda Accord. And here's the kicker. They just added their 17-year-old son to the policy. Any parent watching this knows the feeling of dread when that insurance bill arrives after adding a teenager. It's a financial gut punch. This profile is the ultimate test of multi-car discounts, family plans, and forgiveness for high-risk drivers. I ran the numbers for the Millers. The quotes from the big carriers were, as expected, astronomical. Adding a 17-year-old son is like throwing a grenade into an insurance algorithm. Allstate quoted them an eye-watering $3,200 for 6 months. Geico and Progressive were in a familiar battle, coming in around $2,800 and $2,750, respectively. State Farm, often good with families, was a bit better at $2,600. These are life-altering amounts of money. Then I went to Costco's Connect. The initial quote before any discounts was already competitive, right around the State Farm number. But then the magic started to happen. The multi-car discount kicked in. The safe driver discounts for the parents were applied. And then the big one, the Costco executive member discount. The final number for the Miller family came back at $2,250 for the 6-month policy. Let me repeat that. They were $350 cheaper than their closest competitor, and nearly $1,000 cheaper than the most expensive quote. For this family, switching to Costco isn't just a good deal. It's the difference between affording their family vacation and staying home. It's a massive tangible savings that directly impacts their quality of life. This is the demographic where the Costco Auto program doesn't just compete, it dominates. The combination of Amica's already solid base rates for families, layered with the exclusive Costco discount, creates a value proposition that is incredibly difficult for other carriers to beat. Okay, but what about the other end of the spectrum? Let's look at our third and final profile. This is Robert. Robert is 68 years old, retired, and lives in a quiet town in Florida. He has 1 car, a 2018 Buick LaCrosse, that he owns outright. His driving record is cleaner than a surgeon's scalpel, 40+ years without a claim. He drives less than 5,000 miles a year, mostly to the grocery store and the golf course. He is, by every definition, an insurer's dream client. For Robert, the pricing landscape shifted again. Because his mileage is so low, he's a prime candidate for carriers that specialize in usage-based or low-mileage insurance. When I ran his quotes, Costco's Connect was, once again, very respectable. They quoted him a fantastic rate of about $480 for 6 months. Truly excellent. Geico and Progressive were a bit higher, both hovering around the $550 mark. However, a couple of other players came into focus. State Farm was extremely competitive, nearly matching the Costco price at $490. And the surprise winner for Robert's profile was a company that heavily advertises pay-per-mile insurance. Because his usage was so low and predictable, they were able to give him a quote of around $440. So what does this all mean? What's the big takeaway from our 3 case studies? It proves, first and foremost, that there is no single cheapest insurance company for everyone. It just doesn't exist. Your age, your location, your car, your driving history, and your family situation create a unique pricing DNA that different insurers will weigh differently. But it also reveals a powerful truth about the Costco Auto program. It's not a gimmick. The discount is real, and it's applied to a base rate from Amica that is already fundamentally competitive. For Sarah, it made them a top contender. For Robert, it put them in the top tier. And for the Millers, it was a category killer. The data suggests that the more complex your policy, the more cars, the more drivers, the potential for bundling with home insurance, which we'll get to later, the more powerful the Costco advantage becomes. It's also worth quickly breaking down the membership level. Costco offers a discount to all its members, but executive members get a slightly larger, undefined extra discount. In my testing, this usually translated to an additional 3 to 5% in savings. Now, is it worth upgrading your membership from Gold Star to Executive just for the insurance? Let's do the math. The upgrade costs $60 a year. For the Miller family, an extra 4% on their $4,500 annual premium is a savings of $180. In their case, it's a no-brainer. The upgrade pays for itself 3 times over. For Sarah, with her higher premium, it would also likely be worth it. For Robert, whose premium is much lower, the extra savings might only be $40 or $50 a year, so he would break even or lose a little. But of course, that's before you factor in the 2% reward on all your other Costco purchases. When you look at the whole picture, the executive membership is almost always the better financial move if you're a candidate for their insurance. So we've established the price is legit. For many people, especially families, it's more than legit. It's a potential game changer. The numbers check out. But price is only one half of the insurance equation. And frankly, it's the less important half when things go wrong. A cheap price is worthless if the company disappears when you need them most. What happens when you actually have to file a claim? What is the customer service experience really like when you're standing on the side of a highway at 2 a.m. in the pouring rain? Is Connect by Amica a top-tier service provider? Or are you sacrificing quality for that low Costco price? That is the million-dollar question, and it's exactly what we're going to dissect next. Let's start by pulling back the curtain on the company behind the curtain. The insurance you get through Costco isn't actually from a company called Costco Insurance. It's provided by a company called Connect, which is a wholly owned subsidiary of Amica Mutual Insurance. Now, if you're an insurance nerd, you just heard the name Amica, and your ears perked up. If you're not, let me explain why that name is so important. Amica isn't just some random insurance company. They are, consistently, one of the highest-rated insurance companies in the entire country for customer satisfaction. For years, J.D. Power has showered them with awards for their claims service and overall customer experience. They are the gold standard. Think of it like this. If car insurance companies were restaurants, Amica would be the one with a Michelin star that you have to book 6 months in advance. They are known for white glove service. And a huge reason for this is their structure. Amica is a mutual insurance company. This is a critical detail. Unlike a publicly traded company like Geico or Progressive, which has to answer to stockholders on Wall Street, a mutual company is owned by its policyholders. That means their primary legal and financial obligation isn't to maximize quarterly profits for investors. It's to provide the best possible service and value to their members. In theory, this aligns their interests directly with yours. When the company does well, the profits are often returned to the policyholders in the form of dividends. It's a fundamentally different business model, and it's one that has historically led to phenomenal customer service. So when Costco, a company obsessed with member satisfaction, decided to partner with an insurer, they didn't pick some cut-rate, no-name brand. They partnered with a company owned by one of the most respected names in the entire industry. On paper, this is a dream team. You get the Costco price backed by the Amica reputation. But here's where we need to introduce a little bit of nuance. You're not buying insurance from Amica Mutual directly. You're buying it from Connect, their subsidiary. And while they are part of the same family, they are not identical twins. Think of it like Toyota and Lexus. Both are made by the same parent company with a legendary reputation for reliability, but the experience, the features, and the price point are intentionally different. So, does that Michelin star service from Amica fully translate to the Connect experience? Let's look at the hard data first. Every year, J.D. Power releases its U.S. Auto Insurance Satisfaction Study. It's the industry Bible. And year after year, Amica Mutual is at or near the very top of the list. In many regions, they are the undisputed number one. Connect, however, is often ranked separately. And its scores, while typically above the industry average, are almost always a few notches below its parent company, Amica. This isn't a condemnation. Being above average in the insurance world is still a huge win, especially for a program that is so price competitive. It suggests that you're getting service that's better than most major carriers, but perhaps without some of the premium, hand-holding touches that define the mainline Amica brand. To get a clearer picture, we have to go beyond the big surveys and look at the claims process itself. Because a low price and a friendly phone agent don't mean a thing if the company fights you tooth and nail when you actually need them to pay for a new bumper. This is where we see the divide most clearly. When you read through hundreds of reviews and customer testimonials, a pattern emerges. The positive reviews for Connect's claims process are fantastic. People talk about how stunned they were at the speed and efficiency. They'll say things like, "I filed my claim on the app at 10 a.m. An adjuster called me by noon, and the money was in my bank account in 2 days." They rave about the process being seamless, digital-first, and incredibly easy. For a straightforward claim, a cracked windshield, a clear-cut fender bender where the other party is at fault, the system seems to work brilliantly. It's fast, it's modern, and it's exactly what you'd hope for. However, the negative reviews also tell a story, and they tend to cluster around more complex claims. This is where the cracks in that Lexus versus Toyota analogy start to show. The most common complaint by far is a lack of communication and a revolving door of adjusters. Imagine this scenario, which is a composite of dozens of real-world complaints. You get into a serious accident. Your car is likely totaled. You call Connect, and the initial agent is friendly and reassuring. They set you up with a claim number and a rental car. So far so good. But then silence. Few days go by. You call back to get an update. You're routed to a call center and speak to a different person who has to pull up your file. They promise your assigned adjuster, "Let's call him John. We'll call you back." John never calls. You call again the next day, and you get a different agent who tells you your claim has actually been reassigned to Susan. You spend 10 minutes bringing Susan up to speed. She promises to look into it and call you back. Maybe she does, maybe she doesn't. Meanwhile, the body shop is calling you for authorization, the rental car company is telling you your coverage is about to expire, and you're stuck in the middle, feeling like you're project managing your own insurance claim. This is the single most frustrating experience a policyholder can have, and it appears to be a recurring theme in complaints against Connect. It suggests a system that might be optimized for high volume and efficiency on simple claims, but can get bogged down and impersonal when things get complicated. Another data point we can look at is the National Association of Insurance Commissioners, or NAIC, Complaint Index. This is a powerful, unbiased tool. The NAIC tracks the number of confirmed complaints filed against an insurance company relative to its size. The national median is set at 1.0. A company with a score of 2.0 has twice as many complaints as you'd expect for a company its size. A score of 0.5 means they have half as many. It's a direct measure of consumer satisfaction. Historically, Amica Mutual has a complaint index that is astonishingly low. We're talking numbers like 0.1 or 0.2, meaning they have 5 to 10 times fewer complaints than the average insurer. They are in a league of their own. Connect, on the other hand, typically has a complaint index that hovers somewhere around the national median of 1.0, and sometimes a bit below it. Again, this is not bad. An average or slightly better than average complaint score is perfectly acceptable, and it blows many of the big national budget brands out of the water. But it proves the point. You are not getting the exact same chart-topping, world-beating service that Amica Mutual is famous for. You are getting a very good, very respectable level of service from a company that shares its DNA, but operates under a different philosophy, one that is built for the scale and price point that a partnership with Costco demands. So what's the final verdict on service and claims? It's overwhelmingly positive with a huge asterisk. The connection to Amica provides a foundation of financial stability and a customer-centric ethos that you simply won't find in most other discount insurance programs. For the vast majority of customers and the vast majority of claims, the experience is likely to be smooth, fast, and satisfying. However, you are sacrificing that last 10%, that premium white glove. We'll handle everything peace of mind that makes Amica Mutual legendary. If your claim is complex, if it involves injuries, or if it's a messy he said, she said situation, you have a higher chance of experiencing the frustrations of a large, volume-focused system, communication gaps, adjuster roulette, and delays. The question you have to ask yourself is that a risk worth taking for the potential savings? For many people, saving $500 or $600 a year is absolutely worth the small chance of having a more frustrating claims process down the line. For others, that ultimate peace of mind is priceless. So we've established the price is elite and the service is surprisingly solid, even with a few blemishes. But the raw numbers on your premium and the service you get during a claim are only part of the equation. What about the fine print? Are there hidden benefits or gotchas in the actual policy that make this deal even better? Or potentially worse? That's where we're going next. When you sign an insurance policy, you're not just agreeing to a price, you're entering into a legal contract. And like any contract, the devil, and sometimes the angel, is in the details. Most of us just scroll to the bottom and click I agree, but with the Costco program, that's where some of the most compelling reasons to switch are hiding. Let's start with the biggest one. A feature so rare in the auto insurance world that many people don't even know it exists. It's called lifetime renewability. Think about that for a second. What's one of the biggest fears people have after they get into an at-fault accident, besides the immediate stress? It's that letter they get in the mail 6 months later from their insurance company. The one that politely says, "Thanks for your business, but we will not be renewing your policy. You've just been dropped." Now you're scrambling, forced to shop for new insurance with a fresh accident on your record, and you know your rates are about to go through the roof. You've become a high-risk driver overnight, and insurers are treating you like you've got the plague. The Costco program, through Connect, offers guaranteed lifetime renewability for your auto policy. As long as you are a Costco member in good standing, they will not cancel your policy due to the number of accidents or claims you file. Let me repeat that because it's a huge deal. They will not drop you just because you had a bad year on the road. This is an incredible safety net. It's like having tenure. You're protected. Now, this isn't a get-out-of-jail-free card. There are, of course, some common-sense exceptions. They can and will drop you for specific reasons. If you don't pay your premium, you're out. If you commit fraud or make a material misrepresentation on your application, like lying about who drives the car or where it's garaged, they will cancel you, and they should. If your driver's license gets suspended or revoked, you're no longer a legal driver, so you can't be insured. And if you move to a state where they don't offer coverage, they obviously can't cover you anymore. But notice what's not on that list. A couple of fender benders. A teenage driver who has a few learning experiences. A string of bad luck with deer on a country road. With many other carriers, that kind of activity could get you non-renewed in a heartbeat. With the Costco program, your rates might go up. That's how insurance works. But you won't be kicked to the curb, forced to find coverage elsewhere at an exorbitant price. For anyone who values stability and long-term peace of mind, this single feature could be worth more than a slightly lower premium somewhere else. It's a promise of loyalty from the insurer, which is something you rarely see. Okay, so that's the big one. What else is hiding in the policy? For executive members, and this is a key distinction, the policy includes roadside assistance. This isn't some cheap, basic service. It covers you for up to $75 per incident for things like towing, a flat tire change, a jump start, fuel delivery if you run out of gas, and lockout services if you lock your keys in the car. Let's put that into perspective. A basic AAA membership costs around $60 a year. The next tier up, AAA Plus, which often has a towing distance of 100 miles, can be close to $100 a year. The roadside assistance included here isn't unlimited, but for the vast majority of common roadside issues, that $75 allowance is more than enough to cover the cost. So, if you're an executive member and you're already paying for a separate service like AAA, you could potentially cancel it and save that money. That's a direct, tangible value that makes your Costco executive membership and this insurance policy work even harder for you. And it's not just for one car. It applies to all covered vehicles on your policy. Another neat, often overlooked benefit is the glass repair deductible waiver. This is a small thing that makes a big difference. Let's say you're driving down the highway and a truck kicks up a rock, putting a nice star-shaped chip in your windshield. With many insurance policies, you have two choices: pay out of pocket to get it fixed for maybe $75 to $150, or file a comprehensive claim. If you file a claim, you have to pay your deductible, which might be $250, $500, or even $1,000. Nobody is going to file a $500 deductible claim for a $100 repair. With the Costco policy, if the chip or crack in your windshield can be repaired instead of replaced, they waive your comprehensive deductible entirely. You pay nothing. Zero. You call the approved glass vendor, they come out and fix it, and you don't see a bill. This is fantastic because it encourages you to fix small chips before they spread into giant cracks that require a full, expensive windshield replacement. It saves you money, it saves the insurance company money in the long run, and it keeps your car safer. It's a simple, smart, pro-consumer feature. So we have lifetime renewability, included roadside assistance, and a glass repair waiver. These are serious, valuable perks. But now we have to talk about the other side of the coin, the gotchas. The fine print that can work against you if you're not paying attention. The first and most obvious one is the membership requirement itself. The entire program is contingent on you being a paying Costco member. If your membership lapses, your insurance eligibility goes with it. They won't cancel you midterm. But when your policy comes up for renewal, they will send you a notice of non-renewal. You'll have to find other insurance. This isn't a huge problem for die-hard Costco fans, but if you're someone who might let your membership expire for a year to save $60, you need to understand that you're also putting your auto insurance on the chopping block. The two are permanently linked. Second, and this is critical to managing your expectations, you are not being insured by Costco. Costco does not have an underwriting department or claims adjusters. You are being insured by Connect, a subsidiary of American Family Insurance. While Costco has used its massive leverage to negotiate these special benefits and discounts for you, the day-to-day experience, paying your bill, using the mobile app, and most importantly, filing a claim, is handled entirely by Connect. The person on the other end of the phone during your worst moment after an accident will be a Connect employee, not a Costco employee. So while the program is a Costco deal, the service is a Connect experience. That's why looking at Connect's customer service and claim satisfaction ratings, as we did earlier, is so important. The third gotcha is availability. This amazing deal isn't available to everyone. The Costco Auto program is not licensed in all 50 states. As of my research for this video, there are several states where you simply can't get a quote. This includes places like Alaska, Florida, Louisiana, Maine, Massachusetts, Michigan, North Dakota, Rhode Island, and Wyoming, among a few others. And this list can change. So before you get too excited, the very first step is to go to the Costco website and see if they even offer it where you live. It can be a huge disappointment to hear about all these benefits only to find out you're in a state they don't serve. Finally, and this is perhaps the most important gotcha of all, the Costco discount does not guarantee it will be the cheapest option. It's a fantastic program, but it's not magic. Insurance pricing is incredibly complex. It depends on your age, your car, your driving record, your credit score, your zip code, and dozens of other factors. For many people, especially those with clean records and Costco executive memberships, the Connect quote will be the lowest they can find. But for many others, a company like Progressive, Geico, or a local agent representing a smaller mutual company might still come in cheaper, even without the Costco discount. This is why you can never rely on one quote. The deal in the Costco program isn't just about the final number on the screen. It's about the total package. It's the price plus lifetime renewability, plus roadside assistance, plus the other perks, all weighed against the customer service reputation of the underwriter. For some, a quote that's $10 more a month from Connect might be a better deal than the absolute cheapest option from a competitor because of that lifetime renewability safety net. For others, a $50 a month price difference will be too much to justify. So we've uncovered the hidden gems and the potential pitfalls in the policy structure. But what about the actual coverage itself? When you're building your policy, what are your options? Can you get rideshare insurance if you drive for Uber or Lyft? What about gap insurance or new car replacement if your brand new car gets totaled? The nuts and bolts of the coverage you can actually buy, and how it stacks up against the competition, is what we're breaking down next. Let's start with the absolute basics, the foundation of any auto insurance policy you buy, whether it's through Costco or from a Geico on TV. We're talking about your core liability, collision, and comprehensive coverages. Connect offers all of them, just like every other major carrier. Your liability coverage, which is legally required in almost every state, pays for damage you cause to other people and their property. Collision pays to fix your car if you hit something, and comprehensive covers theft, vandalism, fire, or hitting a deer on a back road. There's nothing revolutionary here. Connect provides these standard coverages at levels that are comparable to Geico, Progressive, or State Farm. You can choose your limits and your deductibles. It's the bare minimum, the price of admission to be a legitimate insurance company. So, if you're just looking for a rock-bottom state minimum liability policy, the Costco program isn't going to offer you some secret magical version of that. The real story, the place where you can actually see a difference, is in the optional coverages, the add-ons that protect you from those specific gut-wrenching scenarios we all dread. Let's talk about one of the biggest ones first: roadside assistance. This is a major selling point for Costco, especially for executive members. If you are an executive member, roadside assistance is included with your auto policy for free. Let me repeat that. It is included. This isn't a small thing. This covers towing to the nearest qualified repair shop, jump starts, flat tire changes, fuel delivery, and lockout services. Now, if you're not an executive member, you can still add it to your policy for a fee, and it's generally competitively priced. But for executive members, this is a direct value add that could replace your AAA membership. A basic AAA plan can cost you over $60 a year. Right there, the Costco program is putting money back in your pocket before you even factor in the premium savings. Next up is a feature that sounds almost too good to be true: lifetime renewability. This is another perk specifically for executive members, and it's a huge source of peace of mind. Here's what it means. As long as you meet a few simple requirements, Connect guarantees they will not cancel your policy. Think about that. You get into an accident or two. With another insurer, you might get a letter in the mail saying they're dropping you at your next renewal. You're too high risk. You're left scrambling to find new insurance, which will now be ridiculously expensive because of your recent claims. With the Costco program's lifetime renewability, that fear is gone. Now, there are some important conditions. This isn't a get-out-of-jail-free card. You have to pay your premium on time, obviously. You can't have any major convictions like a DUI or reckless driving. There can't be any fraud or major misrepresentations on your application, and you have to maintain your Costco executive membership. But if you're just a regular person who has some bad luck on the road, a fender bender, a claim for a broken windshield, they promise not to kick you to the curb. Your rates might still go up after an at-fault accident. That's how all insurance works. But they won't non-renew you. This is a rare and incredibly valuable benefit that provides a level of stability most other insurance companies simply don't offer. Okay, let's address that question about your brand new car. You just drove it off the lot, it has that new car smell, and then bam, someone runs a red light and your car is declared a total loss. The problem is, a car depreciates the second its wheels touch public pavement. Your standard insurance payout will be for the car's actual cash value, which could be thousands of dollars less than what you just paid for it, and almost certainly less than what you still owe on your loan. This is where two crucial coverages come in: new car replacement and gap insurance. And yes, Connect offers both. New car replacement is pretty straightforward. If your new car is totaled within the first year of ownership or the first 15,000 miles, whichever comes first, they won't just give you the depreciated value. They will pay to replace it with a brand new car of the same make and model. This is a premium add-on, but for the peace of mind it offers in that first year, many people find it's worth every penny. But what if you're outside that first year? That's where gap insurance, or what Connect calls loan/lease payoff coverage, becomes your best friend. This coverage pays the difference, the gap, between the car's actual cash value and the amount you still owe on your loan or lease. Let's say you owe $25,000 on your car loan, but after an accident, the insurance company determines its value is only $21,000. Without gap coverage, you'd get a check for $21,000, and you would still be on the hook for paying the bank the remaining $4,000 for a car that no longer exists. It's a financial nightmare. Gap coverage pays that $4,000 for you. It's an absolutely essential coverage for anyone who is financing a new vehicle with a small down payment. The fact that Connect offers this means they're a serious player for new car owners. Now for the big one in today's gig economy. What if you drive for Uber or Lyft? This is a massive gray area where a lot of drivers are unknowingly exposed to huge financial risks. Your standard personal auto policy explicitly excludes commercial activity. The moment you turn on that app and are waiting for a ride request, you are technically engaging in a commercial activity, and your personal insurance is void. Uber and Lyft provide some coverage, but it can be limited, especially in that period when your app is on, but you haven't accepted a ride yet. To solve this, you need what's called a rideshare endorsement, and I'm happy to report that Connect offers one. This add-on extends your personal auto policy to fill in the gaps left by the rideshare company's insurance. It ensures you're covered from the moment you turn the app on to the moment you drop off your passenger. If you drive for a service like Uber, Lyft, or DoorDash, even part-time, having this endorsement is not a luxury. It is an absolute necessity. Driving without it is a gamble you cannot afford to lose, and it's a huge plus that the Costco program provides this option. So the coverage options are robust. They have the specialty items that provide real value in specific situations. But is anything missing? Is there anything the big-name competitors offer that you can't get through Costco? For the most part, no. They cover the vast majority of needs. However, one area to be aware of is accident forgiveness. Many companies like Progressive or Allstate heavily advertise this feature, where they won't raise your rates after your first at-fault accident. Connect does offer accident forgiveness, but it isn't always available to purchase from day one. In many cases, it's an earned benefit after you've been a claims-free customer for a certain number of years. So if having first accident forgiveness right out of the gate is a top priority for you, you'll need to check if you can purchase it as a buy-up option in your state, or if you'll have to earn it over time. Another smaller feature some other insurers offer is an OEM parts guarantee, which ensures that if your car is repaired, they will only use original equipment manufacturer parts, not cheaper aftermarket ones. Connect's standard policy doesn't always guarantee this, but it's often available as an optional endorsement. So the theme here is that the Costco program is not a stripped-down bare-bones product. It's a full-featured insurance offering that competes head-to-head with the biggest names in the industry. The coverages are there. The perks, especially for executive members, are real and valuable. You've got the lifetime renewability, the included roadside assistance, the new car replacement, and the critical rideshare endorsement. These aren't just minor bullet points. They are solutions to real-world problems that can save you thousands of dollars and immense stress. But the price you ultimately pay isn't just about the coverage you select. It's about the discounts you qualify for. And the list of discounts you can get through Costco is extensive. It's a complex web of savings based on your car, your driving habits, your education, and even your profession. We're about to break down every single one, from the obvious to the obscure, to see if they really add up to that legendary Costco deal. So let's start with the big one, the discount that gets everyone in the door. The exclusive Costco member discount. This is the headliner, the marquee feature. Simply by flashing your membership card, you're supposed to get a lower rate than the general public applying directly to Connect, powered by American Family Insurance. Think of it as a VIP pass that immediately cuts the price of admission. Now, the exact percentage is a closely guarded secret. It's baked into the final quote, but insiders and member reports suggest it creates a noticeably lower starting point. But here's the critical thing to understand. That member discount is not the end of the story. It's the beginning. It's the foundation upon which all other discounts are built. If you stop there, you're leaving a mountain of money on the table. The real magic, the place where a good price becomes a legendary Costco deal, is in stacking the additional discounts. And the first and arguably most powerful stack is based on you, the driver. Let's talk about your driving record. Every insurer on the planet gives you a discount for being accident-free, usually for 3 to 5 years. That's standard. But the Costco program through Connect has something they call the Premier Safety Discount. This is a level up. It's for the truly elite drivers, the ones who have gone 4, 5, even more years without a single accident, violation, or claim. It's a reward for long-term, consistent, boringly safe driving. And boring is beautiful when it comes to insurance rates. This discount can be substantial, often one of the largest single percentage points you can shave off your premium. It's their way of identifying and heavily rewarding the lowest-risk people. And if that's you, you're already on the fast track to a great rate. Now, what about the new school method of proving you're a safe driver? I'm talking about telematics, the little apps or devices that track your driving habits in real time. Does Connect use them? Yes, they have a program, and it's a double-edged sword. It monitors things like hard braking, rapid acceleration, late-night driving, and phone usage. If you're a calm, defensive driver who avoids rush hour and doesn't drive much after midnight, you could see significant savings. The app gives you a score, and a higher score means a lower bill. However, if you have a lead foot, live in a city with constant stop-and-go traffic that forces hard brakes, or work a night shift, this program could actually work against you. It's a trade-off. Your privacy and driving data in exchange for a potentially lower premium. For the right person, it's a no-brainer. For others, it's a non-starter. You have to be honest with yourself about how you actually drive, not how you think you drive. Let's move on to the students in your family. The classic good student discount is here in full force. If you have a driver on your policy who is enrolled full-time in high school or college and maintains at least a B average or a 3.0 GPA, you get a discount. The logic is simple and backed by decades of data. Students who are responsible enough to get good grades tend to be more responsible behind the wheel. They're less likely to take unnecessary risks. It's a powerful signal to the insurance company. And this isn't just for teenagers. This applies to full-time college students, typically up to age 25. So if your kid is off at university hitting the books, make sure you're sending in those transcripts, because each one is a coupon for your car insurance. There's another one for students that's often overlooked: the student away at school discount. If your student is on your policy but attends a school over 100 miles away from home and doesn't take a car with them, you can get a massive discount. Why? Because their risk of getting into an accident with your car just plummeted to near zero. They might drive it when they're home for Thanksgiving or summer break, but for 9 months of the year, they're not a primary driver. This can save you a fortune, especially if you have a young male driver on your policy, whose rates are notoriously high. Combining the good student and student away discounts is a 1-2 punch that can make insuring a young driver much more manageable. Okay, let's shift gears from the driver to the vehicle itself. The most obvious discount here is the multi-car discount. If you insure more than one vehicle with them, you save. This is one of the biggest and easiest discounts to get. The insurer saves on administrative costs by having all your vehicles on one policy, and they pass a little of that savings on to you. But more importantly, it makes you a stickier, more valuable customer, so they're willing to give you a better deal to keep all of your business. If you and your spouse have cars insured with 2 different companies, you are almost certainly overpaying. Then you have the vehicle's safety features: anti-lock brakes, airbags, automatic seatbelts, anti-theft systems. The Costco program gives you discounts for all of these. Now you might be thinking, doesn't every modern car have these? And you're right. For the most part, these discounts are already baked into the rates for newer cars. Where this really comes into play is if you have a slightly older car or a classic car that might be missing some of these features. But even for new cars, advanced safety features that are still optional on some models, like blind spot monitoring or automatic emergency braking, can sometimes qualify you for an extra little break. Always make sure you list every single safety feature your car has. Don't assume they know. Now we get to the policy level discounts, the administrative things that can add up surprisingly fast. The king of them all is the multi-policy discount, more commonly known as bundling. If you get your auto insurance through the Costco program, and you also get your home, renters, or condo insurance through them, you get a significant discount on both policies. This is often the single largest discount available, sometimes saving you up to 20% or more. Insurers love bundlers because it dramatically increases customer loyalty. You're far less likely to shop around for a new auto policy if it means your home insurance will go up as a result. It creates a powerful incentive to stay, and they reward you for it. Then there are the small but mighty discounts. Signing up for automatic payments from your bank account? That's a small discount. Choosing to receive all your documents electronically, going paperless? That's another small discount. Paying your entire premium for the 6-month or 1-year term all at once, instead of in monthly installments? That's a bigger discount, because it saves them billing costs and ensures they have your money up front. Individually, these are just a few percentage points. But add them all together, autopay, paperless, and paid in full, and you could be looking at a 5 to 10% savings. It's like finding loose change in the couch cushions, except it happens every single year. Finally, we get to the truly obscure discounts, the ones that most people have no idea even exist. These are based on deep statistical analysis, and they can feel a little weird, but they are very real. Did you know that your education level and your profession can impact your insurance rate? The Costco program, through Connect, offers discounts to people in certain professions like educators, scientists, and engineers. The data shows that people in these fields, on average, are lower-risk drivers. It's not a judgment, it's just what the actuarial tables say. Similarly, having a higher level of education like a bachelor's or master's degree can also sometimes result in a slightly lower rate for the same statistical reasons. Feels a bit like profiling, and in a way it is, but it's profiling based on massive data sets about risk. If you're a teacher with a master's degree, you might be getting a discount you didn't even know you were qualifying for. So let's take a breath and look at the web we've just woven. You start with the Costco member discount. Then you add on the Premier Safety discount for your perfect record. You bundle it with your home insurance. You insure 2 cars. Your kid at college is getting a 3.5 GPA and left their car at home. Your vehicle has a top-tier anti-theft system. You've gone paperless and paid in full. And you happen to be an engineer. Each of these is a thread, and when you pull them all together, the savings can become incredibly compelling. It's not one single thing that creates the legendary Costco deal. It's the synergistic effect of a dozen different things, all stacked on top of each other. But here is the million-dollar question. How much is all of this really worth? A 10% discount on top of a 5% discount isn't a 15% discount. That's not how insurance math works. These discounts are applied in a specific order to different parts of your premium, like your liability coverage versus your collision coverage. It's a complex algorithm, not simple addition. The only way to know the final price is to get a quote. But understanding these discounts is your key to maximizing that quote. It allows you to walk into the process knowing every single point of leverage you have. However, the discounts and the final price are only one half of the equation. A cheap policy that has giant gaps in coverage or a terrible claims process isn't a good deal. It's a trap. And the Costco program has some unique features built into its coverage, things like lifetime renewability and roadside assistance, that you absolutely need to know about before making a final decision. Because what they promise to do after an accident is just as important as the price you pay before one. Let's start with the crown jewel of the Costco Auto program, a benefit so rare in the insurance world it almost sounds mythical: lifetime renewability. Now, what does that actually mean? For most insurance companies, you are a number on a spreadsheet. If you have a few too many claims in a short period, even if they weren't your fault, or if you get a couple of tickets, they can simply choose not to renew your policy when it's up. They send you a letter and poof, you're back on the open market, now labeled as a high-risk driver, facing significantly higher premiums. It's a brutal, cold-hearted part of the business. This is especially terrifying for older drivers, who often fear that one minor fender bender could lead to them being dropped and priced out of driving altogether. But with the Costco program, Connect by American Family promises that as long as you're a paying Costco member, they will not cancel your policy due to the number of accidents you have. Let that sink in. You could have a string of incredibly bad luck. A deer runs out in front of you, you get rear-ended at a stoplight, your car gets hit in a parking lot, and they will not use those claims as an excuse to kick you to the curb. This is a massive, massive peace of mind benefit. It transforms the relationship from a purely transactional one, where you're always afraid of being fired as a customer, to a more stable, long-term partnership. However, and this is critically important, lifetime renewability is not a get-out-of-jail-free card. It does not mean your rates won't go up after an accident. Oh, they will. Just like with any other insurer, your claims history will absolutely impact your premium at renewal time. This promise is purely about keeping your coverage, not freezing your price. Furthermore, there are some major exceptions that will void this guarantee. If you don't pay your premium, they will drop you. If you get a DUI or a major conviction like reckless driving, they can and will drop you. If you make a fraudulent claim or lie on your application, what's known as a material misrepresentation, the deal is off. And of course, you have to maintain your Costco membership. If that lapses, so does your eligibility for the program and its benefits. So think of it as a loyalty pact. You remain a responsible driver and a loyal Costco member, and they promise to stick with you through a bit of bad luck. For many people, especially those with a clean record who just want protection against the unknown, this single feature can be worth more than a slightly lower premium elsewhere. Next up is another perk that gets a lot of attention: roadside assistance. On the surface, this sounds fantastic. Why pay for a separate service like AAA when it's included with your insurance? And for executive members, it's often included at no extra cost, covering up to $75 per incident. For Gold Star members, it's an affordable add-on. This service covers the basics you'd expect: towing to the nearest qualified repair facility, flat tire changes, fuel delivery if you run out of gas, lockout services, and battery jump starts. For the vast majority of common roadside issues, this is going to be a lifesaver. You're stuck on the highway with a flat, you make one call and help is on the way. It's convenient and integrated right into your policy. But here's where we need to pump the brakes and read the fine print. The key phrase is, up to $75 per incident. In today's world, $75 for a tow doesn't get you very far. A tow truck call-out fee can be more than that before they've even hooked up your car. If you break down in a rural area or need to be towed a significant distance, you will almost certainly be paying a hefty amount out of pocket. Compare this to AAA, where their basic plan might cover towing for 3 to 5 miles, but their higher tier plans can cover you for 100 or even 200 miles. So, is the Costco roadside assistance a good value? Absolutely, especially if it's free with your executive membership. It's perfect for everyday, close-to-home mishaps. But is it a full replacement for a premium service like AAA? For most people, especially those who take long road trips or live in remote areas, the answer is no. You should view it as a solid, basic safety net, not a comprehensive, all-encompassing solution. Don't cancel your AAA Plus membership thinking this is an equal substitute, because it isn't. Beyond those two headliners, the Costco program offers a suite of other optional coverages that you can add to your policy, and a few of them are genuinely compelling. One of the most valuable is rental car reimbursement. This is an add-on I recommend to almost everyone, regardless of their insurer. If you get into an accident and your car is in the shop for 2 weeks, how are you getting to work? To school? To the grocery store? Without this coverage, you're paying for a rental car out of your own pocket, which can easily run you $500 to $1,000 or more. With rental reimbursement, the insurance company foots the bill, up to a certain daily limit, say $30 or $40 a day, for a set period. Connect offers this, and it's usually very inexpensive to add to your policy. It's a classic case of paying a little now to avoid paying a lot later. Another powerful option, particularly if you have a brand new car, is new car replacement coverage. This is a beautiful thing. We all know that a new car loses thousands of dollars in value the second you drive it off the lot. If you total that car in the first year, a standard insurance policy will only pay you its actual cash value, the depreciated value. This can be thousands less than what you still owe on your loan, leaving you in a terrible financial position. New car replacement coverage changes the game. If your new car is totaled within the first year or before it hits 15,000 miles, Connect will pay to replace it with a brand new one of the same make and model. This closes that gap and prevents a new car dream from turning into a financial nightmare. Again, this is an optional add-on that you have to pay extra for, but if you're buying new, it's something you should seriously consider. They also offer gap insurance, which is similar but applies if you have a loan. It pays the difference between the car's cash value and the amount you still owe the bank. And there's even coverage for things like glass repair with no deductible, which can be a great convenience. The point is, the Costco program isn't just a bare-bones discount policy. It's a full-featured offering that allows you to build a robust safety net around yourself. You can customize it to your needs, whether you're a commuter with an older, paid-off car or a family with a brand-new, financed SUV. The key is understanding that these aren't all included automatically. You have to be an informed consumer, look at the menu of options, and decide which ones make sense for your specific situation. So, when you lay it all out, the coverage promises are impressive. Lifetime renewability provides a level of security that is almost unheard of. The included roadside assistance is a valuable perk, even if it isn't a full AAA replacement. And the optional coverages allow you to create a policy that's just as comprehensive as what you'd get from any top-tier national carrier. On paper, it looks fantastic. Ticks all the boxes. But here's the billion-dollar question that no brochure or website can ever truly answer. What happens when things go wrong? When you're standing on the side of a rainy highway, heart pounding after a collision, and you have to actually use this insurance you've been paying for? How do they treat you? Are they helpful? Are they fast? Or do you get stuck in a bureaucratic nightmare? All the promises in the world don't mean a thing if the company doesn't deliver when you need them most. And that real-world experience, the claims process and the customer service, is exactly what separates the good insurers from the great ones. So let's dive into the trenches. Let's look at what happens when the rubber literally meets the road, and you have to make that dreaded phone call. To do this, I want to tell you two stories. These are composite stories, built from dozens and dozens of real-world customer reviews, forum posts, and testimonials. They represent the two polar opposite experiences people have with Connect, powered by American Family. Let's call our first driver Sarah. Sarah is a Costco executive member, has a pristine driving record, and bundles her home and auto insurance through the program. One rainy Tuesday morning on her way to work, she's rear-ended at a stoplight. It's not a terrible accident, but her bumper is crunched, a taillight is shattered, and her neck is sore. It's her first real accident, and she's shaken. She pulls over, exchanges information, and with trembling hands, she calls the claims number on her insurance card. This is the first moment of truth. Within 2 rings, a calm, professional voice is on the line. Sarah explains what happened, her voice still shaky. The representative is patient, empathetic. He walks her through the immediate next steps, confirms her coverage, and explains that a claims adjuster will be in touch within 24 hours. He gives her a claim number and asks if she needs a tow or immediate assistance. Already, a little bit of that panic begins to subside. The next morning, she gets a call from her assigned adjuster, a woman named Linda. Linda is fantastic. She asks how Sarah is feeling first and foremost. Then she clearly explains the process. Sarah can choose any body shop she wants, or she can use one of their pre-approved network shops, which will guarantee the repairs for as long as she owns the car. Linda also tells her that since she has rental car reimbursement on her policy, a rental will be arranged and billed directly to them. No out-of-pocket for Sarah. Sarah decides to use a network shop near her office. She drops the car off, and the rental car agent is literally waiting for her with the keys. The body shop handles everything directly with Linda. A few days later, Linda calls with an update. The shop found some minor frame damage that wasn't visible initially. Linda says, "No problem. I've already approved the supplemental estimate. It might add 2 days to the repair, but we want it done right." 10 days after the accident, Sarah gets a call. Her car is ready. She picks it up and it looks brand new. The repairs are flawless. She returns the rental car, signs a single form at the body shop, and drives away. The entire process was seamless. She was never in the dark, she was never out of pocket for the rental, and she felt like she had a professional advocate, Linda, guiding her the entire time. For Sarah, the Costco Auto Insurance program wasn't just a good deal. It was a lifesaver. It performed exactly as promised, turning a stressful event into a manageable inconvenience. This is the dream scenario. This is the experience that earns those glowing 5-star reviews. But for every Sarah, there's a Mark. Mark is also a longtime Costco member. He switched to Connect a year ago because the savings were just too good to pass up. One afternoon, a driver runs a red light and T-bones his SUV. The side airbags deploy, the vehicle is clearly not drivable. Thankfully, Mark is okay, just bruised and badly rattled. The other driver is clearly at fault, and the police report confirms it. Mark calls the claims number from the side of the road. He's put on hold for 15 minutes. Finally, someone picks up, takes his basic information in a rushed, impersonal tone, and tells him an adjuster will call him back. He arranges his own tow to a local shop. 24 hours pass. No call. 48 hours pass. Still radio silence. Mark calls the main claims line again. He waits on hold for 20 minutes this time. He finally gets a representative who can't find his file at first. After some searching, they say, "Oh, it looks like your claim was assigned to a team in the Midwest. Let me transfer you." He's transferred and it goes to voicemail. He leaves a message. Another day goes by. Nothing. Mark is now without a car. He has rental coverage, but he can't get it authorized without talking to an adjuster. He's furious. He calls again, and this time he finally gets a hold of someone on the assigned team. This person is his third point of contact, and they tell him his original adjuster is out sick, so the claim is being reassigned. Finally, a week after the accident, an adjuster inspects his car. The body shop estimates the repairs at $9,000. The Connect adjuster's estimate comes in at $6,000. They've specified using aftermarket, non-OEM parts, and their labor rate is lower than what the shop charges. The body shop manager tells Mark, "We can't do the work for this price, and we strongly recommend original manufacturer parts for a new vehicle like yours." Now Mark is stuck in the middle. He's fighting with his own insurance company to get them to approve the necessary repairs to bring his car back to pre-accident condition. The adjuster is slow to return calls. When he does, he's argumentative, treating Mark like a nuisance. The rental car authorization is a nightmare. They'll only approve a compact car, even though Mark drives an SUV and needs the space for his kids and their gear. He ends up paying out of pocket for an upgrade. The whole process drags on for over a month. A month of endless phone calls, voicemails, and stress. A month of fighting for every little thing that should have been simple. In the end, the car gets fixed, but the experience leaves him completely drained and disgusted. The money he saved on the premium feels like a pittance compared to the time, energy, and frustration the claims process cost him. For Mark, the Costco Auto Insurance program was a complete and utter nightmare. So, which one is the real Connect experience? Sarah's dream or Mark's nightmare? The frustrating and honest answer is both, and the data backs this up. When you look at J.D. Power's 2023 U.S. Auto Claim Satisfaction Study, American Family, the underwriter for Connect lands squarely in the middle of the pack. They scored 878 out of 1,000. That's not terrible. It's just 1 point below the industry average of 879. It's better than some big names like Geico and Progressive, but it's well below the leaders like Amica Mutual and Erie Insurance. Average is the perfect word to describe it. This means for every person who has a great, above-average experience like Sarah, there's likely someone who has a frustrating below-average experience like Mark. Digging deeper, the picture gets even more complex. J.D. Power also breaks down customer satisfaction by region. And here's where it gets really interesting. In California, American Family is a top-tier performer. They score way above average. But in Florida, they're near the bottom of the list. In the Mid-Atlantic region, above average again. In New England, below average. What this tells us is that your experience with a Connect claim can be heavily dependent on where you live. The quality of the local adjusters, the network of affiliated body shops, and the state-specific regulations all play a huge role. It's not one monolithic company. It's a collection of regional operations that perform very differently. This is the critical piece of the puzzle that most reviews miss. A 5-star review from someone in San Diego might not mean anything if you live in Miami. Furthermore, we have to consider the business model. Connect is a direct-to-consumer insurer. There are no local agents. When you have a problem, you can't walk into a brick-and-mortar office and talk to a person who knows your name. Your only lifeline is a national 1-800 call center. And in that environment, you are completely at the mercy of whoever happens to pick up the phone and whichever adjuster gets assigned your case from a pool. If you get a great one like Sarah's adjuster, Linda, your experience will be fantastic. If you get an overworked, undertrained, or just plain difficult adjuster like Mark did, you're in for a world of hurt with very little recourse. This lack of a local agent to advocate for you is, in my opinion, the single biggest risk factor with this type of insurance program. When things go right, it's irrelevant. But when things go wrong, it's everything. That's the trade-off you're making for those lower premiums. You're sacrificing the potential for personal advocacy in exchange for upfront savings. For some, that's a perfectly acceptable trade. For others, it's a deal-breaker. So let's draw the battle lines. Who should be sprinting towards a Costco Auto Insurance quote, and who should be running in the opposite direction? Let's get incredibly specific because this is where the real value is. Costco Auto Insurance through Connect by American Family is likely a fantastic deal for a very particular type of person. Let's call this person the confident DIYer or the spreadsheet optimizer. This is you if you are meticulously organized. You have a clean driving record, maybe one minor fender bender from 5 years ago, but nothing serious. You own your home, you have good credit, and you probably already have other Costco services because you appreciate the straightforward value proposition. You are comfortable navigating websites in 1-800 numbers. You don't feel the need to have a personal relationship with an insurance agent because frankly you see insurance as a utility like electricity or water. You just want the lowest possible price for a reliable product, and you're willing to handle the administrative side yourself. If a claim happens, you're confident in your ability to document everything, make the calls, and manage the process. For you, the hundreds of dollars in potential annual savings isn't just a bonus, it's the entire point. The Costco member discount, the potential bundle savings, the included roadside assistance. It all adds up to a number on a spreadsheet that just makes sense. You understand the broker model, and you're perfectly fine with it. You just want the best rate they can find for you, and you'll take it from there. If this describes you, you owe it to your wallet to get a quote. It could very well be the best deal on the market for your specific situation. Now let's talk about who this is probably not for. This is for the person who values relationships and guidance, the peace of mind seeker. This is you if your driving record is, let's say, colorful. You've had a couple of at-fault accidents, a speeding ticket or two, or maybe something more serious like a DUI in your past. For you, finding insurance isn't about getting the lowest price. It's about finding a company that will cover you at all, and an agent who can navigate that complex history to find the best possible option. You need an advocate. You need someone who can pick up the phone and plead your case with an underwriter, someone who knows the ins and outs of high-risk policies. A streamlined, algorithm-driven system like Connect's online portal might simply deny you outright or quote you an astronomical rate with no room for discussion. This is also not for you if you're a small business owner who uses your vehicle for work. If you're a contractor with tools in your truck, a real estate agent driving clients around, or a delivery driver, you likely need a commercial policy, or at least a policy with specific endorsements for business use. This is a nuanced area where a local independent agent is worth their weight in gold. They can ensure you don't have a massive gap in your coverage that could bankrupt you if you get in an accident while on the clock. Costco's program is geared towards standard, personal auto use. Don't risk your livelihood to save a few bucks on a personal policy that won't cover you when you need it most. Furthermore, if the thought of dealing with a call center during the most stressful time of your life, right after a major accident, gives you anxiety, this might not be the right fit. If you want to be able to walk into a physical office, sit down across a desk from a person who knows your name, and have them guide you through the claims process step by step, then you need a local agent. That human element, that hand-holding, is a service. It's an intangible product you're paying for in your premium. With a direct model like Connect, your agent is whichever representative answers the phone. They may be perfectly competent and helpful, but they won't be your agent. They won't know your history or have that personal investment in your outcome. So what's the final verdict? Is Costco Auto Insurance a good deal? The answer is a resounding "it depends." It's not a simple yes or no. It's a tool. And like any tool, it's fantastic for the right job and completely wrong for another. It is an undeniably good deal for the low-risk, self-sufficient, price-conscious consumer with a straightforward insurance profile. For that person, it can offer savings that are almost impossible for traditional carriers to beat. But the term deal is about more than just the price. A true deal is about value, and value is subjective. For someone with a complex history or a need for personalized service, the deal is finding an experienced agent who can get them the right coverage and be their champion during a claim. The extra cost in their premium is the fee for that expertise and peace of mind, and for them it's worth every single penny. Here's the ultimate takeaway. This is your action plan. Don't just take my word for it. You need to do the legwork, but now you know exactly what to look for. Step 1. Go get the quote from Costco. Seriously. Takes 15 minutes online. Costs you nothing. This is your baseline. This is the number the spreadsheet optimizer in you needs to see. Get the quote with the exact same coverage limits you have now, so you're comparing apples to apples. Step 2. While you're at it, get quotes from the other major direct-to-consumer players. Go to Progressive's website. Go to Geico's website. Get their numbers. Now you have a cluster of data points for the direct model. Step 3, and this is the most important part. Find a local highly rated independent insurance agent in your town. Not a State Farm agent, not an Allstate agent. Those are captive agents who can only sell one brand. You need an independent agent who represents multiple companies. Call them and say, "I'm shopping my auto insurance. Here are my current coverage limits. Here is the best quote I've gotten so far. Can you beat it? And more importantly, can you explain the value your service provides?" This is the ultimate test. The independent agent will now do the shopping for you across a dozen or more carriers you've never even heard of. They might come back and say, "Honestly, I can't beat that Costco price. For your clean record, it's a great deal. You should take it." A good agent will be honest if they can't win. Or they might come back and say, "I'm within $50 of the Costco quote, but the company I'm placing you with has a much better claim satisfaction rating, and you have my direct cell number if anything ever goes wrong." Now you can make a truly informed decision. You're no longer just comparing prices. You're comparing business models. You're comparing a low-price, do-it-yourself model against a full-service, advocacy-based model. And you can decide which one fits your life, your personality, and your risk tolerance. In the end, the Costco Auto program is a powerful force in the market. It uses its massive brand trust and scale to offer a product at a price point that is often incredibly compelling. It's a fantastic option for the right person. But it's not a magic bullet. The deal isn't just the number at the bottom of the screen. The real deal is understanding what you're buying. Insurance isn't a product. It's a promise. It's a promise that if the worst happens, a company will be there to make you whole. And your decision comes down to who you trust to deliver on that promise. A streamlined, efficient, and affordable system, or a dedicated human being sitting in your corner. Now you have the framework to choose. Thank you for sticking with me through this deep dive. I hope this breakdown provided you with immense value. If it did, do me a favor and hit that like button. It truly helps the channel. And more importantly, I want to hear from you. Drop a comment below. Have you used Costco Insurance? What was your experience? Did you save a fortune? Or did you run into issues with a claim? Your story could be the final piece of the puzzle for someone else watching this. And finally, if you want to continue making smarter, more informed decisions about your money and the products you use every day, make sure you subscribe and turn on notifications. We're just getting started.